Gene, can a market tell a chairman of the Fed what to do?
Well, it seems like it can. You know, in 15 of the last 16 times when the market was pricing a rate cut, a 25 basis point rate cut within 4 months of a meeting, the Fed cut. Last time the Fed didn't do that was in 1996. So, you know, it seems like, I think it's not unusual that the market reacts much more quickly than a central bank. A central bank should be more slow acting and basically waiting for confirmation. But, you know, it looks like the odds are pretty high now that they will be forced to cut.
Not that Pimco could see a virus coming, but Gene, the call on Pimco has been shockingly prescient over the last 90 days. How does Pimco readjust to this global slowdown?
I think we're having an active debate as to, you know, what the shape of the downturn looks like. Is it a V or is it a U? You know, the bottom line is, I think when you have a shock like this, you typically, you know, experience some kind of V-shaped recovery, but it's easier said than done because you don't know how deep the V is and how long, you know, lasting it is. And so we're still trying to come to grips with that. And I think it probably makes us, you know, not try to catch any falling knives. I think we're still in the very early stages of the market pricing this something like a pandemic rather than an isolated event in China or in Asia.
Yeah, so a lot to still learn about how this develops. Gene, good morning. Maya, good morning to you. Is this a dip that you can buy, Maya, or do you need to wait to see a peak in global infections? Because it seems as if we maybe have seen that in China in the daily infections, but not globally.
Yes, and that's sort of the perversity of it, if you like, is that the source, which was China, we've had a really meaningful fall in new infections. We've had a meaningful increase, nearly 1,000 discharges a day. So the debate, I think, has changed in China. But of course, what's challenging for markets and for investors alike is that we've got real fears of what we've basically has so far been sort of a supply side problem turning into demand destruction as it spreads with great uncertainty across the world. I mean, yesterday we had another 3 countries added to the group. And it's that uncertainty that's really challenging. And so to answer your question, I think we're operating in something of an information vacuum where to us at Columbia Threadneedle, it doesn't seem prudent to really move things in either direction.
Okay.
We're not adding nor are we taking away.
Okay, and with that in mind, with that vacuum in existence, do you see fiscal authorities stepping up to move? We've seen from Hong Kong this announcement that the helicopters are flying now. They're going to be giving out cash to people in Hong Kong to spend. That's an economy, of course, that was beaten up long before the coronavirus by other factors. Is that going to be something we see more of, a big fiscal push?
I think it probably is something we will see more of, but I think it's important to remember that sort of traditional fiscal stimulus will take a while to feed through. So I think perhaps what we see more of is what we had in China in the last few days, more sort of micro measures to support companies and so on. But I do think when we think about the interplay between monetary and fiscal, to the point you were making earlier, Gene, you know, I think monetary policy is typically not very effective when it's a supply shock, which is what we've got. Of course, if that supply shock turns into a demand disruption, or indeed if we see a meaningful tightening in financial conditions, as we did, for example, in Q4 2018, I think that changes the debate. But we're not quite there yet.